This video is created by Jagrat Creations. It is on liquidation of companies. I wish to solve one sum here before you on liquidation of company, wherein statement of affairs is required to be prepared. Observe the sum on the screen. This is the sum which I intend to solve here before you. First I will read, then explain. Insol Limited is to be liquidated. The summarized balance sheet as at 30th September 2016 appears as under: liabilities, equity shares rupees 25 lakhs, secured debentures on land and building realizable value is 11 lakhs, the liability is 10 lakhs, so they are fully secured. They will collect that 10 lakhs rupees out of the proceeds of land and building. Remaining 1 lakh will be available to the liquidator for distribution to unsecured creditors. Unsecured loan, trade creditors, land and building 5 lakhs, building is 5 lakhs, realizable value 11 lakhs. The amount that is likely to be realized for land and building is much more than the book value, and there is a gain expected therefrom to the extent of 6 lakhs. Other fixed assets, the fixed assets are 20 lakhs, realizable value 18 lakhs, so likely loss on realization of other fixed assets will be 2 lakhs. Current assets 35 lakhs, that is the realizable value. The book value of current asset is 45 lakhs, realizable value 35 lakhs, so likely loss thereon is 10 lakhs. Taking the above into account, prepare a statement of affairs. Now, in my previous lecture, I have tried to explain what is statement of affair. I will repeat once again in this lecture. Over and above, I will talk about deficiency account as per list H. So, let me explain you the theory part, though here you are not questioned for preparing deficiency account, but for the academic interest point of view, I am going to prepare deficiency account here before you. So let me have an arrangement. The same sum is presented here before you because I want to prepare notes for you for explaining. Whenever you are required to prepare a statement of affairs, what is statement of affairs? Liquidator is appointed to operate the proceedings of winding up. Winding up is a process by which the legal existence of the company is brought to an end. So liquidator is appointed for that legal process. On being appointed, he assumes all the assets of the company, find its realizable value, and from this realizable value, he will try to settle the claims against company of, say, preferential creditors, unsecured creditors, debenture holders, etc. Whatever the claims are there against company, if it tries to settle all those claims, will the funds be available? Will the funds available be sufficient to meet with the claims, or how much will be the surplus at the end after meeting the claim of equity shareholders, or how much will be the deficiency for the purpose of payment of equity shareholders, or how much is the surplus after preference shareholders? All these things are to be reported by a statement, reported by a liquidator in a statement known as statement of affairs. And for the purpose of preparing statement of affairs, first of all, list A is prepared. List A shows that out of all these assets, the assets that are not pledged and what is the realizable value of it. So here, list A. You know that land and building is an asset. Debenture holders has a right on it. So it is a mortgage pledged asset. But these other fixed assets and current assets are, as per list A, they are not pledged. Realizable value is what? 18 lakhs and 35 lakhs. But in case of 18 lakhs, there is a deficit of 2 lakhs likely loss is 2 lakhs. And here the likely loss is 10 lakhs. So here also I work out this deficit and surplus because I am going to use this information for the purpose of preparing deficiency account as per list H. So at the same time, see, this you have already studied in partnership admission, partnership retirement, wherein revaluation account or the profit and loss adjustment account was prepared by you. Or same thing you have studied in case of capital reduction account, wherein increase or decrease in the value of asset was transferred to capital reduction account. Same way here, deficiency and surplus is worked out. The realizable value of fixed asset is 18 lakhs, book value is 20 lakhs, likely loss on that account is 2 lakhs. Similarly, likely loss on account of current asset is 10 lakhs. This information this is the details which I am going to prepare for statement of affairs. Here I am going to work out the deficit and surplus that will be reported in a deficiency account as required to be reported by the liquidator, wherein the liquidator explains how this deficit or surplus has arisen. So this is how list A is prepared. Now list B, I am required to take care of assets that are pledged. So land and building 11 lakhs, claim against that is 10 lakhs. So amount available to the liquidator is just 1 lakh. So list B, assets mortgage, 11 lakhs is the realizable value. Liability there against 10 lakhs. So amount available to the liquidator for distribution is 1 lakh. So total amount available to liquidator is 54 lakhs. But in case of land and building, realizable value is 11 lakhs and book value is 5 lakhs. So there is a surplus of 6 lakhs. So I have recorded surplus of 6 lakhs in this column. Notice it's an important point. This information I am going to use for the purpose of preparing deficiency account, which I wish to discuss in this sum, though not asked in the question. Now, 2 lists are over. After that, I am required to pay preferential creditors. Excise duty demand 1,50,000 is an unrecorded liability, contingent liability, not found on the face of the balance sheet. On the face of the balance sheet, these are the liabilities. In this liability for bill discounted and liability for excise duty demands, these 2 liabilities are not incorporated in these liabilities. Remember it. So they are unrecorded liability. And out of this unrecorded liability, excise duty liability is a preferential liability that has to be paid in priority. And when you are required to pay the unrecorded liability, it increases your deficit. Or such unrecorded liability, if required to be paid, you know that it is debited in capital reduction account in case of reconstruction sum, or it is debited to revaluation account in case of partnership admission return. Same is the course, but the name is different. Here deficiency account is prepared, where this unrecorded liability 1,50,000 being preferential has to be paid in priority from the proceeds of assets. But that is going to increase the deficit. So next, as per list C, preferential creditors are paid. 1,50,000 rupees are payable. So 54 lakhs minus 1,50,000, total available with the liquidator is 52,50,000. And this is the unrecorded liability required to be paid. So it is recorded, it increases the deficit. So I have recorded that with deficit. Now, A, B, C, 3 lists are over. In case of list D, we are required to pay debenture holders with floating charge. Here the debenture holders are there, but they are not having floating charge. They have got a fixed charge on the land and building, and they are already paying in list B. So no need to pay debenture holders 1 again, and there are no other debenture holders or no other creditors who holds a floating charge. So there is no payment for list D, that is debenture holders or creditors having floating charge. After that, who will come? Unsecured creditors. If you notice unsecured loan 20 lakhs, trade creditors are also considered to be unsecured creditors, and this bill discounted 1 lakh is also unsecured creditors. These are the unsecured creditors. But this unsecured loan and trade creditors are the recorded liability, while bill discounted is an unrecorded liability. And when you are required to pay unrecorded liability, of course it is an unsecured creditors, but that increases your deficit. So next, as per list E, while list D is not there, creditors having floating charge is not there in this sum. So list E, creditors, unsecured creditors 56 lakhs. How 56 lakhs is arrived at? 20 lakh plus 35 lakh, 55 lakh plus 1 lakh, 56 lakhs. Now this 1 lakh is an unrecorded liability that increases the deficit. So 1 lakh recorded is add, 1 lakh is recorded that adds to the deficit. Now 52,50,000 are the funds not sufficient. From that, if you try to pay 56 lakhs, there is a shortage of funds. That shortage of funds is identified as deficiency. So deficiency, for the purpose of making payment to unsecured creditors, the deficiency estimated to be 3,50,000. So this is the deficiency that we have estimated. After making payment to unsecured creditors, next you are required to pay preference shareholders. But in this sum, there are no preference shareholders. The preference shareholders are to be paid as per the next list, that is list F. It is not there. After preference shareholders, you are required to pay equity shareholders. So equity shareholders are required to be paid as per list G, and the claim of liquidity shareholders is 25 lakhs. So list G, if you try to pay equity shareholders 25 lakhs, then there is a deficiency of 28,50,000. So 28,50,000 is the deficiency that may occur, or that is estimated by the liquidator when it tries to make payment as required by law from the proceeds of assets. So this is how the deficiency is worked out. Now this deficiency is required to be explained. Now when I want to explain the deficiency, I have already mentioned the decrease, the loss in realization of asset, loss in payment of unrecorded liability, gain on realization of asset. There is a profit and loss account debit balance 20,000 already established loss, reported loss in the balance sheet. That also I am required to write here. Profit and loss account debit balance 20 lakhs is also recorded. So if you make a total of loss, so 2 lakh plus 10 lakh, 12 lakhs. 12 lakhs is a deficit. 6 lakhs is the gain, so 6 lakhs are left. 6 plus 1, 7 lakh 50,000, 8 lakh 50,000, 28 lakh 50,000. So this deficiency of 28 lakh 50,000 is explained. How this 28 lakh 50,000 deficit has arisen, that is, these are the reasons that explains this deficit of 28 lakh 50,000. Now all these reasons are required to be reported in a statement known as deficiency account as per list H. So all these reasons are required to be reported in a statement known as deficiency account as per list H. Now how these things are reported as required by law, that I want to demonstrate next. Of course, this has not been asked to me in this question, but with an academic interest to explain the theory part of it, because from next sum onwards I intend to take difficult sums wherein I am going to prepare statement of affairs and deficiency account simultaneously. So just to prepare the minds of the student, I want to explain deficiency account in this sum, though not question. Now how this deficiency account as per list H is prepared, that I am demonstrating. Just observe. This is what I have explained to you from the sum. On the basis of this, I want to prepare deficiency account. The liquidation started, as you know, on 30th September 2016. Now the layout of deficiency account which I intend to explain to you is this one. This is the layout of deficiency account. Deficiency account is bifurcated into two parts. Items contributing to deficiency, items reducing the deficiency. If you look at all these items, the realizable value of land and building, which is expected to be 6 lakhs more over the book value, that is going to reduce the deficiency. So profits and income other than trading profits, land and building 6 lakhs, that reduces the deficiency. So 6 lakhs rupees are recorded here. Notice it. Now in this deficiency account, so this is to be recorded in point number 9. Remember, point number 9, because these points are, you are supposed to write down this point in the examination. Now one more thing. This 2 lakhs and 10 lakhs, the estimated realizable value is less than the book value. So that results in loss or deficit. So items contributing to deficiency, this 2 lakhs and 10 lakhs. So that is to be recorded in point number 5. Estimated loss, now to be written of other fixed assets 2 lakhs and current assets 10 lakhs. So this is the loss, deficit has arisen because the realizable value of this asset is less than the book value. So it is to be recorded, these two items are to be recorded in point number 5. This 6 lakhs in point number 9, 5 and 9. Two points I have explained to you. The unrecorded liability. Unrecorded liability, as you know, excise, which was considered as preferential, and rebate discounting of bill. So this 1 lakh and 1,50,000, 1,50,000 is preferential excise duty liability, and this is discounting of bill. So these two were unrecorded liabilities. So other item yet to be accounted for. So preferential creditors and bills discounted 1 lakh, 2,50,000, that I recorded in item number 6, other items 2,50,000. So how many points I have explained to you? Point number 9, point number 5 and point number 6. Now in this list H, you are required to, the liquidator is supposed to report 3 years information just immediately before the date of commencement of liquidation. The date of commencement of liquidation is 30th September 2016. 3 years before that, that is 30th September 2013. So as on 30th September 2013, that is 3 years back from the date of liquidation, excess of capital and liabilities over the assets. So debit balance of profit and loss account, or you can say that excess of capital and liabilities over assets, that is negative balance of profit and loss account, as on 30th September 2013, that you are required to report it here, it is nil in this case because we are not given that information. Net dividends and bonus declared during the period of 3 years. Net trading losses, including the same period profit and loss account debit balance as given. You are given the debit balance of profit and loss account 20 lakhs. So this 20 lakhs are recorded here. So I have this debit balance of profit and loss account 20 lakhs is already given. That I recorded here. So this net, the profit and loss account debit balance within 3 years, which has arisen within 3 years, just before the commencement of winding up, is to be recorded and reported in point number 3. Point number 4, losses other than trading losses. Speculative losses, loss by fire, that type of losses are known as losses other than trading losses. So they are to be reported in point number 4. So losses other than the trading losses written off, or for which the provision has been made in the books of accounts during the period, all such losses are to be recorded here, non-trading losses. 5th point I have already explained to you. 6th point is also unrecorded liability for which has contributed for rising of the deficit. They are recorded in point number 6. Now this point number 7, excess of assets over capital and liabilities as on 30th September 2007, just 3 years back. So if 3 years back, the assets are more than liability, asset side is more than the liability side, then it will be recorded here. But if the liability side is more than assets, then it will be recorded in point number 1. So either there will be point number 1 or there will be point number 7. Out of these two, one of them will be there. One should be there. Both cannot occur at a time because they are just opposite to each other. Net trading profits, that is this profit and loss account debit balance in this way. If there is a credit balance of profit and loss account, that will be reported in point number 8. And this 9 point that I have explained. Now 20 lakh plus 12 lakh plus 2 lakh 50,000, 34 lakhs 50,000 minus 6 lakhs. So 28 lakh 50,000 is a deficit. This is how list and deficiency account is prepared. And this deficiency as per list as 28 lakh 50,000 should match with the statement of affairs deficiency 28 lakh 50,000. So this is how I have explained to you the contents of statement of affairs and contents of deficiency account. How this deficiency account is reported as required in the law, that also I have demonstrated here before you with an academic interest. Now let me start with the sum wherein I am going to prepare only statement of affairs for the given sum. Now let me start. So remember one thing, this is a liquidator statement of affairs as on 30th September 2016. This continuous one, this is not just opposite to each other. It is for my convenience I have recorded just opposite to each other. Here first of all I am going to write down list A, list B, list C, etc. So what is list A? Assets not specifically placed as per list A. Assets specifically placed as per list B, in which estimated realizable value due to creditor deficiency ranking as unsecured and surplus. So this is the details of list B. list C is so here the reporting requirement for gross and net. So that I'm going to explain to you after a couple of minutes. Secured creditors are not going to be paid because they are already paid in list B. Now you have to pay preferential creditors as per list C. After preferential creditors, debenture holders floating charge with list D, that is not there in sum. So unsecured creditors will be paid as per list D. Then list F is for preferential holders, which is not there in this sum. So next list will be the equity shareholders as per list G. And ultimately, deficiency or surplus will be worked out. Now, first of all, I start with contingent liability. Contingent liability below for bills discounted 1 lakh and for excise duty. This excise duty liability is a preferential creditor, and here you are required to pay preferential creditors. And this rebate on bills discounted is an unsecured liability. I am going to write down this bill discounted 1 lakh in an unsecured liability, unsecured creditors. And this excise duty I am going to write down in preferential creditors. This is how I have recorded this contingent liability. Now I start with the information given as to the realization of asset, land and building. Amount realizable is 11 lakhs and the liability there against is 10 lakhs. So from 11 lakh is the estimated realizable value, 10 lakh is the due amount, 1 lakh is the surplus. So 11 lakh, 10 lakh, 1 lakh surplus. This surplus is going into the outer column. So gross realizable value of assets specifically placed, other assets and gross assets. So here this placed assets in gross value 11 lakh is to be recorded here, 10 lakhs will be recorded here, and the amount is already paid, so in the outer column it is going to be nil. Now this 1 lakh available to the liquidator for distribution, so it is transferred to the outer column. So remember, when you write this list B, always write the gross value here, the payment made to creditors in this column, gross liability, here there will be nil, and this realizable amount available to the liquidator transferred to outer column. These 3 points that you should remember. Now, other fixed assets that will go to list A, current assets will go to list A. So, these things are done. Now I start with this liability equity share. That is to be paid last, equity share, that is as per list G. This unsecured creditors, list T. Trade creditors, list T. Land and building fixed assets, this is done. Profit and loss account will go to deficiency account. Now, let me have a total of all these things. 53 lakh. So this 11 lakh plus 53 lakhs is the total gross realizable value, 64 lakhs. Now, this is the total available to the liquidator, 54 lakhs. Estimated total assets available for unsecured creditors, 54 lakhs. Minus pay preferential creditors, that works out to be 2,50,000. Now pay all these unsecured creditors, that is 56 lakhs, so there is a deficit. So 52 lakhs minus 56 lakhs, you can work out the deficit. The other way to report the deficit is the gross realizable value minus gross liability. So 64 lakh minus 67 lakh 50,000. This is another way to work out this estimated deficiency. This is also reporting requirement, and here also if you work out 52 lakhs minus this 20 lakh minus 35 lakh minus 1 lakh, you will come to the same answer, 3,50,000. The estimated deficiency as regards creditors. So if you try to pay creditors fully, there will be a shortage of 3,50,000. But if you try to pay even equity shareholders 25 lakhs, the total deficiency will be 28,50,000. Now the liquidator has already made a statement of affairs in this fashion. Once again I say that this side is you have to record this side in continuation. That I repeat once again. But here I have already worked out the deficiency for the purpose of making payment to equity shareholders. Now if you ask a question, how this 28,50,000 deficiency has occurred, please explain. For that, you are required to prepare deficiency account as per list H, which I have already explained to you, which I just report to you here before you once again, 28,50,000. This is how liquidators, financial statement of affairs and liquidation deficiency account gets prepared. So I have tried to explain you this sum. My intention was to integrate statement of affairs with deficiency account with the help of this example. I have tried to explain you all these things. I feel that you have followed all these things. Thanks to Allah.